Before, the ticker tape stopped printing in October 1929. The world felt invincible, which is exactly how you are being conditioned to feel right now. You are currently walking through a financial minefield, blissfully unaware that the ground beneath your portfolio has already been hollowed out by the same mechanisms that triggered the Great Depression. If you feel like something is wrong, trust that instinct, because the most dangerous enemy is the one you cannot see until your account balance hits zero. Before we peel back the veil on this orchestrated catastrophe, realize that this information is your only shield against the systemic collapse that is already in motion. You are here because you suspect the game is rigged, and you are right to be concerned. Most investors are currently trapped in a cycle of false security, believing that the rules of the market are set in stone, when in reality, they are shifted daily by those who thrive on fear and liquidation. By the end of this journey, you will recognize the exact signs that precede a total market wipeout. And more importantly, you will understand how to extract your capital before the trap snaps shut. In the late 1920s, the atmosphere in New York was thick with the scent of cheap cigars and misplaced ambition. The stock market was not merely a place for trading. It was a theater of mass delusion. Men who had never read a balance sheet were suddenly financial experts, buying stocks on margin with borrowed money, convinced that the growth would never end. The brokers were the high priests of this cult of optimism, whispering that a new era had dawned. They promised that the common man could trade his labor for permanent wealth. But behind the ornate mahogany doors of the major banking houses, a very different conversation was taking place. The architects of this system knew that the expansion was built on empty promises and debt. They watched as the public pushed prices to impossible heights, creating a bubble so fragile that a single whisper of doubt could shatter it into a million pieces. There was a man, Arthur, a typical investor of the 1920s. Arthur walked down Wall Street every morning in 1929 with his chest puffed out, sensing the electric thrill of easy money. He had taken loans against his house and business to buy into the latest industrial stocks. He believed he was smart, that he had cracked the code of prosperity, but he never looked at the ledger beneath the surface. He never saw how the big players were quietly rotating their positions, moving their assets into gold and cash while holding open the door for people like him to buy their overvalued shares. Arthur thought he was climbing a mountain of gold, unaware he was walking into a canyon of debt. He felt safe because everyone around him felt safe. That is the ultimate trap, the safety of the crowd. The silence before the storm was deafening. Even as the fundamentals began to crumble, the newspapers continued to print headlines about endless prosperity. The market momentum fed itself, a self-sustaining engine of greed that blinded every participant to the encroaching darkness. Then came the Thursday that changed everything. It started as a ripple of selling, a small tremor that most dismissed as a healthy correction. But this was not a correction. It was the collapse of a house of cards. The ticker machines could not keep up with the volume, and as the numbers lagged, the panic began to set in. The brokers called for the margins, but the money was gone. Arthur stood in the lobby of his brokerage, watching his life's work evaporate in real time, replaced by endless red ink. The irony was that the very people who had encouraged the speculation were the ones who had already exited the building. They left the doors locked behind them, leaving the masses to be crushed by the falling ceiling. The despair that followed was not just about lost money. It was about the crushing realization of betrayal. The families who lost their homes, the businesses that shuttered overnight, and the generations stunted by poverty were all casualties of a machine that required their destruction to reset itself. The elite did not lose their empires during the crash. They used the low prices of the aftermath to consolidate even more power. They bought the land, the factories, and the infrastructure that the public could no longer afford to keep. This was not an accident of nature. It was a tactical redistribution of wealth from the unsuspecting to the prepared. It is a cycle as old as capitalism itself, a rhythmic breathing of the economy where the lungs are emptied of the middle class to fill the coffers of the few. If you look at the charts today, the digital echoes of 1929 are impossible to ignore. We see the same irrational exuberance, the same reliance on debt-fueled growth, and the same desperate belief that this time is different. The institutions are telling you that the economy is resilient, that the algorithms have solved the problem of volatility, and that your diversified portfolio is essentially bulletproof. But patterns do not care about your feelings or your current comfort. When you see retail participation peaking alongside massive corporate buybacks, funded by cheap credit, you are looking at the exact same anatomy of a collapse that destroyed the generation of our grandparents. The warnings are flashing in plain sight, hidden only by the sheer volume of noise and distraction aimed at keeping you complacent. You are seeing the signs of a market that has become detached from reality, floating on a sea of liquidity that is slowly being drained. The question is not whether the pattern will hold, but whether you will remain a spectator while the music stops. To protect yourself, you must stop listening to the mainstream narrative of infinite growth. You need to identify the assets that hold intrinsic value, the ones that do not depend on the continuous influx of borrowed capital. You must learn to value liquidity over potential gains and preservation over participation. When the system resets, the people who hold the most leverage, not the most exposure, are the ones who walk away with the keys to the kingdom. You have now been shown the blueprint of the trap. You know the history. You recognize the current pattern, and you understand the motive of the architects. The choice you make tomorrow morning when you open your brokerage account will define your trajectory through the coming years. Do not wait for the headlines to confirm the danger, because by the time the news hits the front page, the exits will already be locked. You are more prepared than the millions who are currently sleepwalking through this cycle, and that is your greatest advantage. But if you think that the stock market is the only battlefield where this game is being played, you are dangerously mistaken. The financial system is a complex web of interconnected traps, and each one is designed to catch a different type of investor. There is a secondary mechanism that is currently being deployed to neutralize your savings. A move so subtle that most people will never even notice it until their purchasing power has been completely eroded. If you want to see exactly how they are planning to drain your wealth while you sleep, watch this next video, where I break down the specific maneuver they are using to turn your cash into dust. The danger is not just in what you hold, but in the environment they are building around it. Will you be ready when the next turn takes place? Or will you insist on believing the false promises of stability? Watch now, and stop being the victim of a story that ended 100 years ago.